Hello, Sam Nathan is my name. I'm Director of Residential here at Colliers International in Melbourne. We are a diverse residential business, active across all aspects of the residential property market here in Melbourne, but with a specific focus on the central city and city fringe apartment market. Our business has, well, I think it's fair to say, had an instrumental influence over the evolution of the market for now in excess of 20 years. And for a large proportion of that time, we've had the fortune to be able to work with ParkTrent Property Group across a number of projects, both within the city and across Victoria. We are, fair to say, Melbourne's preeminent residential project marketing group, with that focus around the CBD, having had around an 80% market share through the core evolution of this market since really about 2009, 2010. One of the key focuses for us as a business is to have a holistic understanding of a project, and the project is only as good as its last day in the market. We work backwards from the last day that the development is delivered, all the way through the stages that lead up to the completion and successful delivery of that development for all of the stakeholders. So we come at things from a very holistic perspective, and that works well for all of our clients, be they developer clients, partner sales agent clients, or key consultants involved in a project. We like to embed ourselves in a development from day one and see that through to the end, working with all partners across all aspects of a project until all outcomes are successfully met. It's important to acknowledge when you're in a position such as we are, guiding the project marketing of significant developments that are going to have a big impact and influence on the city, in that we generate a level of comfort, engagement, open communication, and a really close working relationship with everybody that's involved in that development. Having that sense of comfort, goodwill, and a willingness to work together for a common outcome is what has driven our business to the position that it is now over that 20-year time frame.
My name is Ron Cross, Managing Director of ParkTrent Properties Group, Australia. Today I'm in a display centre in the centre of Melbourne, a Colliers display centre, and the project that we're talking about is Aspire. I'm going to be having an in-depth conversation very shortly with one of the directors of Colliers, a gentleman by the name of Sam Nathan. And Sam's going to give us all the nuts and bolts about this wonderful project that we have, Aspire. Let me tell you, it's well worth you staying tuned to. And if you need any further information, you can get on our webpage, aspire.parktrent.com.au. Hello, it's Ron Cross from ParkTrent Properties Group. I'm privileged today to be with Sam Nathan from the Colliers organisation in Melbourne. And Sam, I'm so excited about being here today in this wonderful display centre that you have. Tell me about it so that I can pass on and get this enthusiasm back to our many clients all over the globe that we're looking and viewing this documentary that we're making today.
Yeah, great, Rono. It's a pleasure to be with you, and hello to everybody watching today, wherever you are. This is a wonderful space. It's only been in existence for around 6 months, but we saw an opportunity to be able to create some more value for our clients, help everybody understand the nature of the project.
Well, I want to move in here, Sam. I want to move in here. How do I get a bed here?
It's basically like it's a permanent display suite.
Yeah, it's lovely.
Close to us, which enables us to have great communication with everybody involved in the project, and it's almost a lifetime display suite, particularly for Aspire, where a significant amount of this space is dedicated to the project. So it enables you to get a very quick, almost instantaneous, but very comprehensive understanding of a building, which I think, to the credit for the team, was quite insightful to do.
Yeah. Well, I've looked at the planning and design. There's 564 apartments in the building. It's selling quite rapidly all over the world. People are buying it. And I've analysed Melbourne for many, many years. As you know, ParkTrent's been in operation now for 35 years. We've sold many hundreds, if not thousands, of apartments throughout the whole of Australia. And Melbourne is something that's enchanting to me. It's got massive amounts of growth. In fact, the growth of the city of Melbourne now is just under 5 million.
Yes.
In the next 27 years, it's going to be, they forecast, up to 9 million people. And this project sits beautifully for futuristic, for the value of people coming here. In fact, I call it mansions in the sky.
Yeah.
This is something, people could actually live here in this development, in Aspire, and in fact, never go out.
No, exactly.
It's got everything here. It's got the fine dining, it's got the gymnasium, it's got the pool, it's got the sauna. No doubt it'll have childcare there as well. Step outside the door if you so wish, walk around the block, you've got beautiful parks and everything else there. Melbourne has changed so much in the last 25 to 30 years. It's become a city that's recognisable all around the world as one of the major cities in the world. It's in line with London, if you like, Paris, even New York.
It is.
And I go to New York quite regularly and I love it there. But I've come to Melbourne now and I see lots and lots of shapes of New York happening here. Aspire's such thing, isn't it?
It is. And it's basically the culmination, really, I think, of 25 years worth of experience for the city. It's hard for people when they're looking at Melbourne as a city, either as a city or as a place to live or invest in, that it's really only about 25 years ago since the CBD core of the city started to emerge as a truly cosmopolitan centre. I mean, before that period of time, Melbourne was a 9 to 5 place. Everybody came in from the suburbs at 9 o'clock in the morning, and then at 5 o'clock in the afternoon everybody disappeared. And in the mid-1990s there was some very insightful government and private sector initiatives to start to recognise what the core of the CBD could be. And it was really only the mid-1990s to late 1990s, probably spurned on by a little bit of the recession in the early 90s, about what did developers do with obsolete office buildings, and we started to see residential conversions happen. And since then we've probably had 3 major phases of market evolution, but you get to 2019 and we've had 25 years worth of learnings about what's a design and how does the city work, but fundamentally, how do people want to live in landmark buildings in the core of the city? And I think you've hit it on the head. Aspire is a building now that is the culmination of all of that experience.
Wonderful.
And it delivers the opportunity for people to reflect and live in Melbourne as I think a lot of the world thinks that Melbourne lives. I think local Melburnians still underplay the CBD and the central city. We're actually probably more recognised from our international clients and non-local, be it Sydney, Brisbane, Perth-based, than local Melburnians. I think Melburnians still don't understand the gem that they've got.
The wonderful opportunities that are here.
Yeah.
And what impresses me is, and going back to 25 years that you spoke about, I think Melbourne at the time was the poor cousin, would not being disrespectful to Sydney. But now Melbourne has got the eateries, the fine dining, the arts, everything's here, the sporting capital of the world, can you believe it? And when you come to Melbourne now, it's vibrant, it's all happening day in and day out. And I think in the next 10 or 15 years' time, this will be one of the leading cities in the world. This will be on a par with London, be on a par with New York, and certainly with Paris. And the price points that we're talking about in Aspire today are so conveniently priced and economical for people to become involved. And the returns, the rental returns for those that might want to invest first for a while before they move into their apartment, the rental returns are 6% and above right today. And what we've got is we've got a lead time now, say it's deposit now, we can acquire interest on those deposit monies for the clients. Completion will be in 2023. Oh, Melbourne will change so much in the next 4 years. These are going to be so well priced when we hand them over to our clients.
It's interesting when you look at those 3 and 4 year periods between somebody making a commitment to purchase on a project release and then delivery. And I often go back 3, 4, 5 years at a time in my mind and think, what was it like walking around the streets of Melbourne 3, 4 years ago? And then you cast your mind to where it is today. The city is essentially unrecognisable in a lot of aspects, and it's just a momentum.
But Sam, you're talking about unrecognisable in aspects. You're talking about what you can visually see. What's happening underneath?
Oh, it is. Yeah, that's right.
We have the new metro that would align itself similar to the London tube. It's amazing. It's really $11 to $12 billion project, employing thousands and thousands of people, and it's all happening as we speak in our lifetime. So important.
And interestingly, in a building like Aspire, so many wonderful infrastructure projects happening in the centre of Melbourne and around the fringe for people to get in and out of the city as well, which is very important for people who are living still in the city. But they're all funneling towards that 2023 to 2025 timeline.
That's right.
So from a period of somebody looking as though, what is Melbourne going to look and feel like in 3 or 4 years' time? I use that word unrecognisable. I think people will sit back in the rear vision mirror after that time and say, wow, Melbourne's a different place than what it was. And I think that sums up from a lot of conversations that I have with people that are students of the market and come from advisory backgrounds and really have an analytical view about the city, is what is the catalyst for that change that's happening? But one of the biggest things that they say is, we will get to a point in time where the city stops looking up and counting cranes and tall buildings to justify our growth, like Manhattan. All the tourists, they say, all the tourists look up high at the buildings, all the locals look down low at what's happening. Mm-hmm. And Melbourne's finally at that point, and you walk through the CBD grid. And just to advance on your comment about the analogies to different cities, I think what is not appreciated greatly about Melbourne is the layout of the CBD core. And if you look at those world cities that we all look to around the globe, really only Manhattan is probably laid out like Melbourne from a planning point of view, which enables you to get little sub-precincts within a CBD grid, and you can walk across a couple of streets or a couple of blocks and think, hang on, something has subtly changed here. I'm in a different precinct of the city. And I think that is going to be the catalyst for Melbourne to truly be recognised as not just an emerging world city, but a world city, when people start to understand the subtleties, as you say, what's happening at ground level, what's happening underground with the infrastructure. I think that's the way the city's headed. And, you know, as you say, Aspire is one of the last remaining opportunities for a tower of this calibre and magnitude.
A super tower.
A true super tower, mega tower, that type of development has characterised Melbourne's evolution for the past 10 years, but that isn't a never-ending production line. It's rapidly coming to a close for a number of reasons, and I think it's quite timely that we mentioned we've had 25 years worth of learnings about the market on what to deliver. Just at the time, it's getting very difficult, if not impossible, to replicate this going forward. Yeah. And I think that's an interesting juncture from the market's point of view.
And I think looking at Melbourne today, we're just buttering on 5 million people, just catching up to Sydney. In fact, we're growing faster than Sydney at this point in time. And what the budding investor needs to do, the apprentice, if you like, that's coming into the marketplace and looking which one, this or that, where, which location, they should understand that Melbourne's population of 5 million, it's taken 260 somewhat years to get to 5 million. But yet we're going to double in the next 45 years. So it means there's going to be a tremendous amount of growth. And some of the stats that I've been looking at, we need to complete in Melbourne alone, in Victoria, the state of Victoria alone, 70-odd thousand dwellings each year. 70-odd thousand dwellings each year for the next 25 to 30 years. That's going to mean that anyone involved in property investment in the city of Melbourne, the outer ring of Melbourne, are going to do very well over the next 5 to 10 years.
Yeah, it comes down to that, what is happening from the city's point of view. And if that host city is performing well, and you've got a really high calibre asset within it, then the circumstances around that asset should be great as well. And that bubbles down in its most simple form.
Yes,
certainly. If the host city is performing well, and Melbourne is undoubtedly performing well, in fact it's overperforming on a global scale, then the assets and residential market within that should perform well.
Yes.
And you know, there's a range of factors that do sit behind that, but that is just such a fundamental, very basic tenement that I always live by and look at. And I think some investors actually look to be very complicated, the way that they look at things, and very analytical, but sometimes it is best to just walk across the other side of the street, look at the city and think, what are the factors at play here? What are the influences acting on the city and the buildings in it? Where does this building sit within the city? And is it a good call or not? And sometimes it can be as intuitive as that.
That's right.
You know,
and one of the things that I meet with a lot of budding investors at various investment conferences that ParkTrent organise throughout the year, and one of the things that I do ask the audience, particularly the audience in the 40s and 50s and 50 beyond, knowing what we know our properties performed in our lifetime, do we wish we'd done more back then? Well, how would you like to have bought some properties in Melbourne 25 years ago.
Yeah,
We
exactly.
were selling them here
Yes.
in Flinders Street.
Yes.
And some of our clients still own those properties. Now, they
Yeah.
paid $80,000, $90,000 for them. Today, they're worth $500,000, $600,000.
Yeah.
But what's important, the rentals have also increased in line with the value increases
Yeah.
as well.
Yeah.
So this is a new beginning, I believe, for Melbourne. This tower, congratulations to Colliers, congratulations ICD, the builders and
Yes.
the developers. That's wonderful. But we should not forget also to congratulate and thank the governments that we've had over many, many years in the state of Victoria
Yeah.
that's done a wonderful job with the planning and the approvals for the city of Melbourne. They've really organised it and looked after the city.
Yeah.
They've all the things that you've spoke about here today, they've enhanced and they've protected for future generations.
That's it. And you're creating, I think as Melbourne grows, and invariably Melbourne's CBD core will have to grow, and the planning's in place, whether it's Arden to the north or Fisherman's Bend to the south. We've still got some development to go at South Bank. But the CBD core will always be the CBD core.
Yes.
It will still be the employment hub. It will still be the retail hub. It will still be the attraction for what is quintessentially Melbourne, the laneways, the heritage, the gold era development. I mean, people don't appreciate that Melbourne was historically the richest city in the world at that period of time. What was created then defines a lot of the laneway precincts outside of our office. We can see them today. What is being built today will define the city in 20 or 30 years' time.
Isn't it wonderful? I'm coming back.
Yeah, I think it's a really interesting position that the city's in at the moment.
Yes.
And I come at the market from an advisory background, so I look at things very differently than a lot of people do, and a lot of my colleagues will sometimes question me on the way that I think. But I do like to think of Melbourne in one way, and that is if I'm travelling away or I'm visiting for the first time and I'm coming in from the airport and I'm driving over the Balti Bridge and I'm looking at the city skyline and the fabric of the city. If local Melburnians don't do this, we don't appreciate it. But if you head away for 2 weeks, and you'll appreciate this every time you come back into Melbourne, you look at it with a fresh set of eyes, and it doesn't take long for you to just sum up pretty quickly that there's something pretty special down here in the south of Australia. And it's only going one way, and I think it'll continue the case.
Oh, it has to be, because as I say, the population has grown so rapidly, and not only for the city of Melbourne, the state of Victoria, the all of Australia is growing so rapidly. You know, we have a population today of 25,400,000
Yeah.
people, and it's growing by 10,000 a week.
Yeah.
A lot of those are new babies being born. Our birth rate is quite high now.
Yeah.
It's over 6,000 babies being born
Yes.
each week, and we have 3,000 to 4,000 in migration coming in.
Yeah.
So it means investing in Australia generally is going to be very good.
Yes.
And Colliers are all over Australia, as is
Yes.
ParkTrent.
Yes.
But this particular building, Aspire, in the city of Melbourne, is a once-in-a-lifetime opportunity.
Yeah.
Don't forget that when they're sold, it's gone.
I made the comment before that this isn't a conveyor belt of new opportunities that are going to continue. The Melbourne CBD, from a residential perspective, is almost now at effective full build-out. The shift in the last couple of years where a lot of sites that were potentially going to be earmarked for residential development have come back to commercial because we've had a significant undersupply of commercial accommodation in the market. And sites that were potentially earmarked for residential development have been taken out of the market. We have had a range of planning influences come into the marketplace that are making it more difficult to develop residential towers of this magnitude. So essentially what we're looking at is, as I mentioned before, but the evolution of the market to this point, and Aspire is going to be one of, if not the, very last towers of this nature. So we've had 25 years of learnings. This is the culmination in a building such as Aspire, but the market is effectively in full build out now. So to identify a site as a developer that you can replicate a building of this nature is very, very difficult, very, very expensive, and from a planning point of view and a construction point of view, in a lot of cases, impossible to do. And to be able to replicate buildings of this nature, you're going to have to be outside of the CBD. The height isn't going to be possible. So your comment is absolutely correct, and I think that's been part of or a major component of the success of the building to date, particularly from local purchasers, local Melbourne investors and owner-occupiers, and interstate, is the recognition that this is one of the last.
Sam, what we need to be thinking about here is someone can actually buy an apartment in Aspire on $500,000.
Yes. Yeah.
But in actual fact, that's given them the key to a $450 million development. So they're shareholders in the development.
Yes.
They own part of the dining room, part of the champagne rooms, the sauna, the spa, everything else there.
Yeah.
So for $500,000, gets them in the door for a huge, beautiful super tower.
Yes.
That's amazing. And that's the way we need to look at things now.
It is. We need to look at the entry point is, I think a lot of people historically have just looked at what is the price for my apartment.
Yeah.
The reality is, what am I buying into?
Yeah, what's the price of the building?
What is the price of the building? What is my proportionate share of that? And at $500,000 is tiny, fraction to be able to get access to what that building actually is. So I think you're 100% correct. Purchasers are increasingly in the market looking at what they are buying into.
Yes.
What is the lifestyle? What is the ambience of the building going to be? What is the quality going to be? What are those amenities going to be? Effectively, how do you price lifestyle and amenity? They're intangibles, but when you do have a look at it, they capitalise us in pretty well from that point of view.
Truly. And our experience has been this, so when a building has the facilities that Aspire has, we can attract a very good tenant, an extremely good tenant, a professional tenant, a doctor, a dentist, that type of thing, lawyers, solicitors, school teachers, all those type of people.
Yeah.
And one of the things that's important for the younger people, those types of people, is that they do want the gyms, they do want the pools. If they don't have them in the buildings, they have to pay outside memberships for that. So they will pay a more attractive rent for the facilities.
Yes.
And then they don't have to travel, they don't have to park their car, etc. So we've had great success with securing wonderful tenants in our buildings in and around Melbourne and in the other capital cities of Australia because of the amenities.
You've hit on a very valid point. People talk about vertical living. It's often a bit of a throwaway line, but there's a handful of buildings in the city that truly deliver that.
Yes.
That if you do think, unfortunately, sometimes in Melbourne in the middle of winter, it is dark, wet and rainy. If you get yourself in the front door of the building, you don't need to leave. Everything that you want to do is within the context of the building itself. And that has been a very interesting dynamic to track in the rental market because tenants, I've often said, and there's some people have questioned me on this, but I often think that tenants understand buildings almost better than the owners do in a lot of cases because they're the ones who are actually living there. They are the ones who have the choice of where they choose to live in the city, and they hone in on a certain building or a certain type of a building, and they inherently understand what it is like to live there day to day. Whereas an investor who might be based in the suburbs or interstate or offshore doesn't actually understand what it's like to live there day to day, but the tenant does. And one of the biggest shifts has been in the market in the past 5 years is towards buildings such as Aspire that deliver that holistic offering to a tenant. And there's been a lot of commentary around the rental market in Melbourne over that 5-year period, and where the super towers like Aspire sit in the rental market. And my previous life, I had a significant business with a rental role that specialised in the city. And we were active during 2017, which was historically the biggest supply event that the Melbourne CBD had seen. And there was a lot of commentary about how the rental market would react to that supply. What was very interesting is that the buildings that offered the complete package of amenity and lifestyle, location, design, were how they were going to be accepted in the rental market and how they would perform. The general commentary was rents were going to struggle, vacancy was going to be elevated. The inverse actually came to fruition. The rental values in those buildings ended up being anywhere between 7 and 12% higher than the peer buildings before it. The leasing up periods were extraordinarily low. We used to have some open for inspections, and we might have 20 apartments available. It wouldn't be uncommon to have 100 people through the door.
Well, we know, we lived through that ourselves, and we used to needed to have ushers at the lifts to stop them filling and cramming up. And I might add that directly around where Aspire is, that's where we've had the greatest success.
That's
amazing.
Right.
Flagstaff Gardens, in and around that area there, because you've got the beautiful gardens there. we found that we were one or two apartments, we'd have 25 to 30 people wanting to view.
And you've hit on that precinct that Aspire is in. It's leveraging all different aspects of the rental market. You've got wonderful proximity to the university precinct,
yes,
which is obviously a significant driver for the Melbourne economy. But
the all of Australia.
All of Australia.
I have to also support Sydney purchases, as well.
Yes, exactly on the way. The other element that doesn't get a lot of recognition, particularly to buildings in the northern precinct of the city, is the medical and healthcare precinct along Flemington Road in North Melbourne and the likes. All of a sudden, the northern end of the CBD has the ability to pull tenants out of the education sector, out of the higher value healthcare sector, as well as professional younger individuals and couples from the CBD. You're pulling tenants from the professional sector at Docklands here on the way through, but you're delivering it in basically a parkland setting in a really nice ambience of the city. And the ability for a building to be able to attract basically a 360-degree tenant profile is pretty unique.
Gives us opportunity to scrutinise and make sure we get quality tenants and all times, and also to enhance the building with the type of tenant we get in there.
You've hit on something there, because a building gets one shot at a first impression, either at project release or on the rent once it comes into the rental market. The fact that we are at the end of the construction cycle, the fact that it is nigh on impossible to replicate these calibre of super towers in the market again, means that the future competition isn't going to be there for people that might jump from one tower to the other. The rental vacancy rate published in the Melbourne, central Melbourne, generally hovering around 1% at the moment. But from my personal experience, in these calibre of buildings, the latest offerings, it's generally around 0.6 to 0.7, which is actually below sort of the natural level. So the reality is that is really just accounting for somebody moving out and somebody moving back in real terms. And that's tenants, unfortunately, in Melbourne, and will continue to be so as the lack of supply starts to hit, price takers. So they have to take the price that's offered, and the rental pricing is significantly different than what it was 3 or 5 years ago. And with the absence of new supply coming in, you've got that concentration. We all know what the market response is going to be going forward.
Definitely, yeah. So do you see the yields being somewhere around the 6% initially?
I do, yes. Yeah, I think, and it's interesting, it wasn't that long ago when even the established market, if you were getting 4 or 4.5%, that was an honest return.
Yeah.
Now, all of a sudden, even with the economic cost of delivering these new buildings, you're looking at 5+, 6+% rental returns from day one. Is pretty exceptional.
Current projects, the ParkTrent is settling in and around Melbourne right at the moment. We're achieving 6%.
Yeah.
We're looking at 4 years into the future, so even possibly as high as 7% could be the yield that we're going to get on Aspire.
Yeah, and I think the city itself doesn't actually understand at the moment, Ron, the pressure that the accommodation market is going to come under if you want to live in the core of the city.
Yeah.
The city has been spoilt for the past 5 or 10 years with the new development that has occurred. That's coming to an end, not from market forces, not from a supply and demand perspective, but from a physical point of view, at the inability of sites in their number to be redeveloped. We're at full build out, and that means one thing for the rental market, particularly in the core and a location such as Aspire. So those ingredients are consistent. They've been consistent over the past 5 years, and they'll remain the same going forwards.
Lovely.
Yeah.
Tremendous. One of the things from an investor point of view and a business point of view is that the price is fixed. So if they buy today, it doesn't settle till 2023. But what's not fixed in line with that is the rentals.
No.
The rentals will grow. So we're saying 6% today is very achievable, but come 4 years into the future, it could be 7, even more.
Yes.
So that's a wonderful opportunity, isn't it? So that makes property a super investment.
And the tenant has the opportunity to choose where they go. And it comes back to some of the earlier themes that we were talking about. The tenants are showing a very clear preference for buildings that cater for their lifestyle here and now.
Yes.
Not from 5, 10, 15 or 20 years ago. The vacancy rate is tight in all of those buildings, but the premium results from a rental point of view and from a vacancy risk point of view,
nearly half of what the standard rate is.
Exactly, are coming towards these sorts of buildings that offer that absolute complete lifestyle.
Wonderful. I think I'm going to buy one myself. And I have bought lots of Colliers properties in the past.
Way through, and it's, I think,
And I've done very well out of them, I might add.
wonderful to hear.
Thank you. Thank you again, Sam.
Thanks, Ron. Great pleasure.
Thank you.